Speaking of spice, let's get to the stock of the day. See how I did that? Guzman y Gomez's exit from the U.S. has seen it book a $26.7 million statutory net loss for the year. That's despite delivering record underlying earnings of $85 million, which it says reflects strong sales growth of 18%, with network sales from continuing operations of $1.38 billion. However, GYG reported an annual underlying profit of $53.4 million, up 30%. So meanwhile, like-for-like sales growth in Australia was 5.3%, supported by transaction growth and an increase in customer visits. It's launched a further $100 million buyback and declared a fully franked dividend of 40.6 cents per share and a special divvy of 14.4 cents per share. So Jun Bei, shares are up by 14% today. Has GYG proven the naysayers wrong with this result?
Oh, they definitely have. And on top of that, they worked out the formula to get the share price higher is to announce a good dividend and also buyback on top of a very strong trading update. So result was certainly pretty good. And then the margin was very good. And what couples with that is that there's huge amount of short sellers sitting in this stock. To be honest, I don't know why there are so many short sellers. I think they're positioned for existing big holders to sell down. And clearly, they have been burned today. So what short seller have to do when a good result comes through like that, they have to close it, so they have to buy back. So that hence why you're seeing the big share price movement, in this stock. I think, look, I just feel it's at the moment there's a lot of growth company at cheaper valuation. I don't have to pay a big price for GYG at the moment. It's expensive. It's good growth. It's good, but it just it's illiquid. It's not in any. It's in a small order index, but it's not liquid. It's expensive, and then that does pay next 12 months. Still not yet that certain. We still got cost of living. We've got higher fuel costs. Just a lot of things that's still waiting to be to be confirmed. There's a lot of uncertainty. So for me, I would probably take profit on today, especially when the short seller are forced to buy back. This is your chance to take profit. I'll be looking at other cheaper sort of if you want to buy retail or Domino's, or there's lots of growth companies you can look into at this stage at much cheaper valuation.
All right, so that's a take profits on today's results, Adam.
Yeah, I think the share price is definitely going to be supported by that 2027 trading update. I think that's what the market's really gravitating to. However, some of the positives, as you talked about, that pulling away from the US, I think that's absolutely fantastic. Why would another Mexican restaurant be needed in the US? But they did have some exit costs of around $32.8 million. They were guiding to 30 to 40, so that came in at the lower end of that range. So I think that was definitely a positive. Some of the negatives, though, they are looking for a store rollout of around about 35 new Aussie stores this year, but they have guided to around about 40. So it is going to be a little bit less on that side of things. But I think that guidance is what the market is gravitating to, as well as getting out of the US. For me, I agree with Jun, but I think you should take some profits. It doesn't screen as a cheap stock, and quite comfortable to find other areas in the market to get some growth.
Got it. Hopefully we'll come up with some of those growth companies in the next hour or so.